Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we're back with a brand new week, and yes, it is a holiday truncated one. 3 days of trading session, given yesterday we had a holiday and Friday too we have a holiday. But yes, tariffs, they continue to dominate the headlines. Over the weekend, we saw that the US president announced some tariff reprieve on smartphones and computers and also hinted towards talks to help auto and auto companies. But on the contrary, he also indicated about chip and pharma tariffs, which is about to come soon. So quite back and forth coming on the tariffs front. India particularly, it's set to begin its virtual meeting with the US on tariff negotiations this week itself. So a lot of sectoral tariffs could take precedence. We'll watch out for what the tariff contours also pan out between India and US and how the talks go out on these developments too. But for today, the GIFT Nifty is indicating another good start for our own markets, a gap up start for our own markets. The last session also we saw quite a powerful rally where both the benchmarks ended up nearly up by 2%, and today also the global handover is quite good. US markets have ended in the green overnight, and even Asian Pacific markets, they are doing well this morning. So yes, we'll watch if the markets can brush aside the tariff volatility for at least some time and at least this week too, and we'll take some stocks in focus as we march on the Q4 earnings season. So keep posting your stock related queries. We'll take them up shortly with our market experts too. For now, let's quickly take a look at the top headlines this hour. US stocks jumped to start the week, buoyed by Trump administration putting a temporary reprieve on tariffs on tech imports from China. The Dow ends over 300 points higher, with the S&P 500 and Nasdaq also ending in the green. Asian equities are also largely higher following the rally on the Wall Street. The GIFT Nifty is indicating a strong gap up start for our own markets. Oil prices rise, boosted by the new tariff exemptions announced by the US President Donald Trump and a rebound in Chinese crude oil imports in anticipation of Iranian oil. Brent is trading above $65 per mark, whereas gold takes a breather from its record run. US President Donald Trump has also signaled that he would soon announce tariffs on imported chips and pharma, while also suggesting relaxed levies on auto and auto parts. All right, if you look at the last trading session, Nifty did end the last session with over 400 points gain. 47 out of 50 Nifty stocks closed in the green, and we saw metal and PSU stocks among the top sectoral gainers. We also saw that the index heavyweight, which was your Reliance Industries, also was one of the top contributors to Nifty's gain, up about 3% higher. But however, for the entire week, which was your last week, both the benchmarks saw a decline of about 0.3% cuts. IT and metal stocks, that was the worst performer last week. On the other hand, PSU and pharma FMCG indices, they were the top sectoral performers last week. Today, however, March Q4 results will be ongoing, and today we'll see ICICI Prudential, IREDA, Delta Corp, all of these names reporting their Q4 results today. And for the rest of the week, we have some major Nifty earnings today. This week, which we have index heavyweights like HDFC Bank, Infosys, Wipro, which is going to come out tomorrow itself with its Q4 results, and ICICI Bank and HDFC Bank will be coming out with their results over the weekend too. But let's see some of the cues that will set the tone of the trade today. First up on your screen is the Nifty put call ratio, which has risen to about 0.96 levels from 0.93 levels in the previous session. So yes, some bit of a positivity is prevailing in the markets at this point of time. The next on your screen is how the FI positioning data, where we can see that the FIs have been net sellers in the cash markets. In the last session, they have sold about 2,500 crore rupees. On the other hand, DIIs have once again bought stocks, which is in the cash markets, about 3,700 crore rupees in the cash markets. But yes, just a couple of minutes before we go to the open, but in the pre-open rates we can see that the Sensex is up about 1,600 points. Nifty is also trading with a good start of about 500 points. So both the benchmarks with about 2% uptick at this point of time in the pre-open. But on that note, let's quickly get on board with a technical expert of the show. Joining me is Ruchit Jain of Motilal Oswal. Ruchit, good morning. Now that we have a 90-day pause in tariffs, there is some tariff pivots on smartphone and computers too. How do you think Nifty will react this week?
Hi, very good morning, Lovisha. Well, I think markets would take that as a sign of relief, because a lot of uncertainty was there, or I would say a lot of fear was there, with regards to these tariffs. And since that fear has gone down now, markets would start focusing on the other factors. And if you look at other global factors, the US dollar index have corrected sharply, which is now below 100, which is quite positive for emerging markets like us. Even the crude oil prices are trading at lower levels and are showing some consolidation there. So I think these are all factors which the markets would take positively. And also in the recent volatility, we have seen the markets have managed to form that support base around 22,000, 21,700 mark, which previously, in 2024, from the month of February to May, was also the support. So I think, since the fear has gone down, so markets would focus on some positivity, such as dollar index and the falling crude prices, and this should lead to some positive momentum. We already, SGX Nifty is indicating at some gap up opening, but the 200 DEMA, if we see on the Nifty spot, it's now placed around 23,350 to 23,400. So I think we should see the 200 DEMA testing again now. So market breadth also in last trading session was good. So we expect some pullback move towards that 23,400 to continue.
Okay, 23,400 and 23,350 that we need to test for Nifty too. Ruchit, Bank Nifty, that was one of the sector that received less battering last week. Any levels that you're watching out for this week? We have some index heavyweights like HDFC Bank and ICICI Bank also coming out with their results.
So there's a definite relative outperformance in the Bank Nifty as well as the Nifty Financial Services Index. We can see that the low which was made on at the start of the March in the Bank Nifty has not been revisited in this volatile times. So this clearly indicates that the relative outperformance is there, and the index have now started forming that high top, high bottom structure. So I think relatively the certain private sector banks as well as the NBFC space should continue to do well. On the higher side, 52,000, 52,100 is the previous swing high resistance, which if gets surpassed, then I think we should see Bank Nifty heading higher towards 53,500 positionally. But for now, I think 50,000 would be act as a support base for the banking index. And on the high side, 52, 52, 100 is the range, which one should watch out for.
Okay, all right. Ruchit, how about the IT sector and how should investors approach it? We had the TCS results out. We'll also have Infosys, Wipro out too in a couple of days. How do you expect investors to approach it?
So I think based on the news flows that US might go into some slowdown, we have seen some consistent selling pressure in the IT names. And I think that a bit of uncertainty could continue within the IT space. What we are witnessing is that some pullback moves could be there because Nasdaq has rallied in last couple of trading sessions. And there are a lot of already the stocks have seen a sharp correction of late. So momentum readings technically are a bit oversold somewhere. So bounce back move could be there, but whether this sector would be the one where the outperformance would be seen going ahead, that is a bit doubtful from current levels. So I think it could be a market performer where some pullback move could be there, but from a positional perspective, we believe that banking and NBFCs is much better placed rather than IT. So if any existing long positions are there in the IT space, these are not the levels to exit. Wait for some pullback move. In pullback moves, one can look to lighten up from the IT space and rather look for fresh buying into the banking and the NBFC space.
Okay. Any charts that is looking promising from the IT sector space, Ruchit?
I think within the IT space, one should go with the frontlining stocks itself if one is looking for some pullback move. TCS would be one stock where an up move could be expected in the near term. The momentum readings are a bit oversold over here, so at least a pullback towards the 20-day MA, which is around 3460, could be seen in TCS. But as we discussed that structurally these are not the uptrends which are going on in the IT names. So certain pullback moves could be there. Maybe if one is looking for fresh buying, then I would say wait for at least the results outcome to come in the IT space. Then one can look for the IT sector.
Okay. Ruchit, how about the OMC stocks? Now that we are seeing that crude prices are also cooling off, and even OPEC has indicated, they have cut their demand forecast for this year too. Do you expect the OMC stocks to be better placed in a volatile scenario like this?
Yes, certainly. I think markets would shift the focus towards the falling crude oil beneficiaries. We have seen stocks such as Indigo doing well in last few trading sessions. Even OMCs such as HPCL, BPCL, which are beneficiaries of the falling crude oil prices, have started forming that high top, high bottom structure. So I think relatively these are well placed. So OMCs should do better from current levels. And on the high side, HPCL, we are expecting an up move towards 420, 425 in the short term. So one can look for buying opportunities from a near-term perspective in stocks such as HPCL within the OMCs.
Okay, any particular sector that you're eyeing out for, Ruchit, at this point of time? We discussed about IT and BFSI also, but apart from that, anything that you are watching out keenly?
So more or less, even this OMCs we discussed. So this is one of the space which we are very keenly watching from a short to medium term perspective because of the falling crude prices. Apart from, I think for a pullback move, one can look for metal space because metals have also seen a sharp correction because of this uncertain news flows over. The tariff was mainly between US and the China. So that's why we have seen sharp metal correction. But since the fear is now reducing and the dollar index is below 100 and dollar index and metals also have an inverse correlation. So the fall in dollar index usually tends to be positive for metal. So I think metal would be another space where short-term traders can look for a pullback move.
Okay, okay. Ruchit, pharma stocks were the ones which saw a tremendous rally after they were exempted from tariffs. But now that Trump is indicating that tariffs may be announced on the sector soon, would you say that investors should remain cautious and remain on the sidelines for the time being?
The markets does not like one thing which is uncertainty. Till that hangover will be that how much tariff will be levied by the US among on the pharma stocks, what would be the impacts. I think till that clarity is not there, we won't see sustainable up move in the pharma names. So just for time being, until we see such that clarity coming in, one can definitely stay on sidelines for the pharma space.
Okay, all right. Let's take one stock in focus, which is your Zydus Life Sciences. The company has received final approval from the US FDA for tablets to cure Duchenne muscular dystrophy. Ruchit, if you look at Zydus Life Sciences on the charts, the stock has seen quite a sharp sell-off from its 52-week highs. 860 levels, that is where it last closed on. What do you expect? Do you expect the pressure to continue, the selling pressure to continue on the stock for some time?
I believe price-wise downside could be limited in Zydus Life Science, but there could be some time-wise correction where the stock would trade within a broad range until we see any kind of positive momentum resume in the overall pharma space. The stock has been trading below its 200 DMA resistance, which is around 950. So until we see this 950 levels getting surpassed again, we should not, we do not expect any structural uptrend to coming in the stock. But a broad trading range from 950 to 800, 760, I think this would be the range where the stock should see some time-wise correction going ahead. Yes, this would be one of the name, where in case if we see any kind of dip towards the lower end of this range, then one can look for staggering, staggered buying over there. But that would be more from a mid to long term perspective. From a short term perspective, I think it would be it would trade within a broad range itself.
Okay, within a broad range itself, but less than a second before we hit the open, we were expecting a good start for the markets. So yes, 2% uptick on your screen. Nifty has opened with quite a tremendous rally with about 450 gains at this point of time. 23,250. So 23,250 levels, which is above at right now for Nifty. Sensex is opened also with about 1,000 points higher, 1,300 points higher for the Sensex at this point of time. Nearly 2% uptick for Sensex too. So yes, we have opened with quite a gap up start at this point of time. Bulls have been reeling. We saw that the Friday also was quite a good session for the markets, and it's the second consecutive session for the markets that we are extending this rally, and we are brushing aside the tariff volatility for some time at this point of time. So yes, 90-day pause on tariffs is boding well for the markets at this point of time. Let's take a look at some of the sectoral gainers and losers. All the sectors are trading in the green. If you look at India WIX, which has shot up once last week by about 60%. Today it's seeing a cool off about 9% at this point of time, nearly at 18 odd levels. If you look at some of the sectoral gainers at this point of time, Nifty IT index is doing well with about 1.4% uptick. Bank Nifty doing well with about 1.7% uptick. Nifty Auto Index leading the charge with about 2% gains. If you look at Nifty Pharma Index also doing well with about 1.2% uptick, despite what Trump has said about tariffs, which is coming out for pharma soon. If you look at the broader end of the markets, very healthy trend which is getting absorbed at this point of time. Small caps doing well, mid caps also with about 1.2% gains coming in. Small caps also with about 1.1% gains coming in for the broader end of the markets. 2,000 shares have advanced, 390 shares have declined. mind at this point of our time. So the broader breadth of the markets also is quite in the firmly in the optimistic territory. If you look at some of the top gainers on the Nifty 50, that includes the likes of Tata Motors with about 4% gains, HDFC Bank with about 2.9% gains. This comes ahead of the Q3 results, which is expected to be announced on Saturday itself. Bharti Airtel with about 3% gains, L&T with about 3%, M&M also doing well. Now, however, on the top losers, none of the losers at this point of time on the Nifty 50, so that is a very good start for the markets. Top gainers, however, we can see the likes of Bajaj Finance, Bharti Airtel and Adani Enterprises also doing well. But Tata Motors, that is one stock which is doing well. Ruchit, how does the stock look like on the charts? Because today it is one of the top Nifty gainer, but back in the days it has received already quite a backlash from the investors.
The stock has seen a significant underperformance within the auto space over last few months. And as of now, no, there are no signs of trend reversal. But no, because we have seen very sharp down moves where the momentum readings are a bit oversold, one can expect some short-term pullback moves in the stock towards 640 and 670 kind of levels. But I think until we see any kind of higher top, higher bottom structure coming in the stock going ahead, it's difficult to take a guess that whether the bottom has been done. So, not assuming that the bottom has been done, but yes, from a near-term perspective, because of the oversold setups and some divergences, a pullback move towards 640 and 670 can be seen.
Okay, 640 to 650, but we cannot rule out whether or not there is a bottom in the stock. But another stock which is your roaring in the trade, that is your HDFC Bank. Well, HDFC Bank, what do you expect? Can we expect a further extension of the bull run? Because past 1 month has also been quite a good run up for the stock.
I think as overall the private sector banking space has done quite well since last few months, because these were one of the names. HDFC Bank is there, Kotak Bank is there. They have already seen a long phase of consolidation if you look at the weekly and the monthly charts. So here the price-wise downside seems to be very limited. And as we spoke that, the banking index also been one space where the index has not revisited its March lows. So which itself shows the kind of strength that the private sector banks have been showing. So HDFC Bank, Kotak Bank, these are a couple of names from the private sector banks where we expect this uptrend to continue.
All right, let's take some viewer queries at this point of time. The first query coming in from Naveen is asking the views on Coal India, whether it's a favorable buy or not. Ruchit, any thoughts on Coal India for this time?
Not for the near term, but from a long-term perspective, you can accumulate the stock gradually. Over last few weeks, we have seen that the stock has seen some consolidation from the range of 410 to 350. So I think this is a time-wise corrective phase which is going on in the stock. But yes, price-wise already we have seen that correction getting over around the recent swing lows of 350 maybe. So keeping a stop loss below 350. You can go long, but from a positional perspective, not expecting any significant move from a very short-term perspective.
Okay, not a very significant move. He's asking also on the fresh entry levels for UPL. Past 6 months has been doing well. The stock has been doing well. Do you expect the momentum to continue, Ruchit, for UPL?
Yes, I think UPL should continue its up move, because whenever we have seen any kind of dips in the last 1.5, 2 months, dips towards 590, 600 is getting bought into, and the stock has formed a very strong base over there. Secondly, if you look at the corrections, then we have not seen high volume based selling recently, even in such corrective market. Whereas when the stocks are going up, the volumes are good. So this is overall quite a positive sign for the stock. So we expect this outperformance to continue in UPL.
Okay, all right. Since we were talking about metal stocks also, Ruchit, we have a query coming in on the counter of Vedanta. Satya is asking what is the medium-term levels for Vedanta? Any thoughts on that?
So the stock has seen some correction along with the broader markets, but I think it should see now a consolidation phase where 410, 420 on the high side would be the immediate resistance, whereas major long-term supports are placed around 330 to 340, where on the weekly charts the 200 EMA is placed. So this is the broad range where we expect over medium term the stock should see some consolidation.
Okay, all right. Let's move on to another viewer query. That is Shweta Naidu is asking, she's bought Dixon at 210 levels. Should she exit this rally or hold? Because she's been holding this in a loss for a really long time. please suggest. Ruchit, any thoughts on the stock? Because from December onwards, the stock has been on a spiraling, downward journey, and it's seen about 18% downtake.
I think you should hold on for now. You already kept a good amount of patience in this down move. And finally, after a divergence, the stock has started showing some positive signs, at least for the near term. So a pullback move towards 15,500 to 15,700 could not be ruled out in this rally. So as of now, I would suggest to hold your existing positions and not book losses at current levels. Whenever the stock comes around at 15,500, 15,700, you can take a review again over at that time.
Okay, all right. Let's move on to another viewer query. That is, your Debuk is asking the views on Bondada Engineering for fresh investment. If you look at from 600 levels, it has come down to 400 odd levels. Ruchit, do you expect that this is a good time to buy the stock?
Well, not tracked much, previously the stock, but if I look at the recent chart structures, then we have seen that the stock is still trading below its 200 DMA resistance, and even on the lower side, 330, 320 has been a good support for the stock. So maybe I think some consolidation between these 320 to 460 could be seen going ahead. So not expecting any significant uptrend as of now, but I think one can wait for some more positive price action along with good volumes before looking for fresh buying.
Okay, all right. Let's move on to another viewer query. That is your Devyani International has been asking on how Devyani International is expected to do in the near term. Satya is asking if there is a fresh long position on the stock. Ruchit, any thoughts on the stock? Because QSR stocks have been back in the focus, back in the limelight too. Do you expect Devyani International as an individual counter to regain momentum?
I think the pullback move could be expected because of the price-wise correction has already been there in the stock from its high of around 215, 220. But the volumes are not that high along with the price up move. So in such kind of markets where if the stocks are showing pullback without any meaningful volumes, then I think at higher levels we won't see any sustainable momentum going ahead over there. So I won't advise to go long over here. At the most, in such pullback move, I think the immediate resistance would be around 170 odd levels. So we might see some resistance coming in around 170 in Devyani International.
All right. Let's take one stock in focus, that is your JK Cement. The stock has been doing well with about 0.5% gains. The company is also planning to raise up to 500 crore rupees through private placement of NCDs at its board meeting, which is scheduled for next month, that is your May 24th. The fundraising plan, if approved, will be recommended for shareholder approval at the company's 31st annual general meeting as well. Ruchit, if you look at JK Cement stock, the stock has seen quite a good run up in the past 1 month. Do you expect this trend to continue for JK Lakshmi Cements?
Yes, I think JK Cement should do well over short to medium term. I know the stock has shown a good relative outperformance within the cement space also comparatively, and we have seen that in such kind of markets where price-wise correction has been seen in many of the mid-cap and the small-cap space, this stock has not seen any kind of sell-off recently. So there is a good relative outperformance compared to other stocks within the same sector as well. So which is a good sign that there is a very strong support base around 4,600 to 4,700 range. Until that is intact, the slow and gradual up move can be expected to continue in JK Cement.
Okay, all right. Further up move can be expected. Let's look at another viewer query. Well, Piyush is asking the view on Kalyan Jewellers. If you look at Kalyan Jewellers, Ruchit, so far this year the stock is corrected about 30% or so. Do you expect this to continue for the time being, or where do you expect the charts to go?
Quite volatile stock. Very sharp correction was seen off late from that 760, 770 mark. The stock is yet to surpass its immediate resistance, which is around 540 to 550. So not expecting any significant uptrend immediately, but yes, some consolidation can be seen in Kalyan Jewellers.
Okay, some consolidation is expected on Kalyan Jewellers. Let's look at another viewer query. That is your Shweta Naidu. She's asking on Shakti Pumps at 964 levels. Is it good to hold or sell on rise would be a better strategy on Shakti Pumps? 960 levels. Today also the stock is doing quite well, Ruchit. How do you expect the near term looks like for the counter?
I think good to hold if you have some mid to long term perspective. We have seen that the stock has also corrected along with the broader markets in last 3 or 4 months. But the good thing is that the stock has not breached any of its long term supports, where in such market many other stocks have seen breached of its long term support. So even in this recent correction, the 200 DMA, which was around 800, managed to act as a support, so which is good sign. So if the long term supports are not broken, whenever we see the broader market resuming its up move, I think this stock can again do well. So not from a very immediate short-term perspective, but if you can keep some mid to long-term view, then overall chart success does not look that negative. So I would recommend to continue to hold on your existing positions.
Okay, hold on to existing position for Shakti pumps. Let's move on to another viewer query. Well, Kishore is asking the views on Neogen Chemicals. Neogen Chemicals, how does the stock look like on the charts, Ruchit? From 2000 levels, we are back to 1500 odd levels on the counter.
So yes, it has also corrected along with the broader markets. But if you look at the volumes, then we have not seen any high volume-based sell-off in the stock. And the 1400, 1450 is a very good support for the stock. So the price-wise downside seems to be limited from here on if it till it's holding above that 1400 mark.
Okay, all right. Let's move on to another viewer query. That is Rupak Mehta is asking the views on Kajaria Ceramics. He's down by 17%. What should he do at this point of time? Kajaria Ceramics, any thoughts, Ruchit, on the counter?
So I think overall trend still seems negative for the stock. No, we have seen that the stock had breached its important long-term supports. Around when it was around 1300, 1350 when it broke this level. And post that, whenever there is a pullback move, we have not seen any sustainable buying action happening over there. So could be the oversold setups are there. So could be some short-term pullback moves could be there. But overall structure is not looking positive. So I would suggest a sell on rise kind of strategy to adopt in the stock. Avoid fresh buying over here. In case of existing positions, any pullback moves come in the short term, then take that as an opportunity to exit from this.
Okay, all right. Let's move on to another viewer query. That is your Debu K is asking the views on Gravita India. How does the stock look like on the charts, Ruchit? Because from March lows, the stock has made a good comeback of about 21% uptick. Where do you expect the near term to go?
So some short-term up moves are there in the stock. On Friday session, we saw very good volumes in the stock happening. The last swing low was around 1940. So 1940 is the immediate resistance which needs to be surpassed. In case if that is surpassed, then you can expect on the higher side levels around 2200 to come in the stock.
All right. Let's take another viewer query. That is your Debu K is asking on Raghav Productivity Enhancers. RPEL. Any thoughts on the counter, Ruchit? RPEL, because the stock is trading around like 560 odd levels, and if you look at past 1 month charts, then it's seen quite a tremendous rally on the counter.
Well, limited historical data, so I won't be able to comment for very long term. But just from a short term perspective, some bounce back signs are there because price up moves have been supported by good volumes. There is a higher bottom getting formed after the recent price wise correction, and 650, 660 would be the zone where some going ahead resistance could be seen. So can expect a pullback move towards 650, 650, but not sure about no much long term trend.
Okay, let's talk about one stock in focus, that is your SBI. The stock has been doing well. The lender has also reduced its lending rate by about 25 basis points following the RBI's policy rate cut to make loans cheaper for both the existing and the new borrowers too. Ruchit, from March lows, the stock is up 9%. What's the next target that you're eyeing for? I know that you mentioned that you're more favorable towards the private lenders, but what about SBI as a whole?
SBI, I think, no, as we discussed that the private sector banks have been showing good relative outperformance. SBI has seen some consolidation where 780, 790 has not been surpassed whenever there are pullback moves. So rather than doing any bottom fishing here, I would wait for that resistances to get crossed before turning much positive on the PSU space. So 785, 790 gets surpassed, then one can look for buying opportunities in SBI. Otherwise, it's good to keep it on watch list, and once it gives us a breakout, then one can look for buying opportunities there.
All right, let's take one more stock in focus. That is your Ashoka Buildcon, because that stock has been doing well, quite well. 4% uptick coming in. The company was also declared the L1 bidder for a project which was worth about 569 crores by the Central Railway. What's next, Ruchit? The stock has been consolidating from March lows, but today the stock has seen quite a good uptick.
So yet to surpass its immediate no resistances, which is around 205, 206, around 205. So as of now, trend does not look much positive, but no, just seeing some no pullback move along with the broader market up move. But no, I would wait for a breakout above 205, no, to see any kind of buying action coming in the stock.
Okay, buying action coming in the stock. But let's move on to another viewer query. That is your Nitin Shaji is asking the views on Aeroflex as a counter. Aeroflex, how does the counter look like? Because from February highs, the stock has seen about 35% cut, Ruchit. So what can we expect for the near term?
So near-term trend still remains negative for the stock. The stock is consolidating below its immediate resistances, which are around 180. And until the stock surpasses that 180 mark, no, better to avoid any kind of bottom fishing.
Okay, all right. Just one last question before we let you go, Ruchit. We are seeing a bit of volatility, but 2 days of final reprieve we are seeing at this point of time. Any favorable buys that you are that you want to point out?
So I think Indigo would be one stock where again, I know some positive momentum could be expected going ahead. I know as we discussed previously that the falling crude oil beneficiary stocks should do well even in such volatile markets. So at current levels also, we expect that outperformance to continue in Indigo. So short-term traders can look for buying opportunities over here as well, keeping stop loss below 5,130 for possible targets around 5,460.
All right, Indigo is one stock that we need to watch out for. But with that, we have to let you go, Ruchit. Thank you so much for your time and answering our viewer queries.
Thank you.
All right, let's take a quick check of the markets before we move on to the next guest of the show. We have Sensex, which is up about 1,500 points at this point of time. Nifty also doing well with about 2% gains, 23,250. That is where we are at for Nifty 50 levels too. All the sectoral indices are trading in the positive territory. India VIX has seen a sharp cool off of about 13% or so. 17 levels, that is where we are seeing at India VIX at this point of time. Leading the charge from the sectoral indices, that is your Nifty Realty Index with about 3.7% gains, which is your nearly 4% gains coming in from the Realty pack. Nifty Auto Index also doing quite well after Trump has indicated that he will be doing some talks with auto and auto companies to help them out. Other than that, we can see Bank Nifty doing well with about 2% gains. Nifty IT Index also doing well with about 1% gain, and Nifty Metal Index also shining in the trade with about 2% gains. The overall breadth of the market also remains in the positive. Mid cap and small cap indices also doing well. All right, moving on to the next guest of the show, we have Nirav Karkera of Fisdom. Nirav, good morning. Now that we are seeing 2 days of consecutive rally, and where do you see India to be relatively placed, going ahead for the near term?
So good morning, Lovisha. Indeed, it has been a relief. The last two sessions have been quite a relief. However, at the outset, I can say that, we are not quite out of the woods yet. There's a massive overhang of this entire tariff tantrum that India will continue to experience going ahead. However, versus Asian peers, India seems to be relatively insulated. Number one, it would majorly be on account of the limited export dependence that India has. It is a high consumption economy with a lot of earnings depending on domestic consumption. So that is one vector that will insulate us against that. Second, the diplomatic ties and relationships with the US has improved over the past couple of years, and also from a US standpoint, it is very clear that in penalizing India is not its top priority in terms of agenda. US has other trade relations that it wants to focus on, especially where the trade deficit is much, much more wider than what it shares with India. So a couple of these vectors are positioning India very well in terms of being insulated against the tariffs. In fact, if we go a layer beyond and go to the second level, there are indeed opportunities that are available for India amidst this entire tariff tantrum. So with the most Asian peers like China, for instance, facing a lot of heat in terms of the tariffs that are being imposed, this opens up a sliver of opportunity for India to fill up a lot many gaps in terms of exports. There are several critical sectors where India could be a very good replacement exporting country, like electronics, semiconductors, textiles, jewelry, etc., where the tariffs, although imposed, are slightly lower or not imposed at all. So India stands at a very strong footing amidst all of this tariff tantrum, and the domestic macros are, well, we know it is strong and resilient. The recent monetary policy committee also reiterated that we continue to remain resilient in these trying times.
Okay, all right. Nirav, you said that sector-specific tariffs are also could be on the for India and US too. We have seen virtual talks also taking place with this week also. But what would you say on from the FI's positioning perspective? Now that China and US trade war is quite on the forefront, would you say that can FI's narrative about India would change amidst this tariff tantrum which is going on?
So I'd say FIs have generally been positive and upbeat about Indian markets. Of course, the selling that we witnessed was attributable to a variety of reasons, and the least of the reason would be FIs not being happy with India. So of course that's a much longer discussion. But while FIs continue to remain interested in India, and with the dynamics changing over the past couple of months, with the introduction of tariffs, especially China's standing in this entire debacle that has been brewing. We believe that there could be some, migration of capital that can happen out of China, at least to the extent where, the FIs get a much more clearer view on what is the reciprocals going to look like, and what is the policy action going to look like, and what is the actual trade impact and earnings impact that they can expect in China. So there could be some capital migrating out of China, and for funds that are mandated to take emerging market exposure, and those willing to take emerging market exposure, India stands strong as a top contender, especially considering how the valuation froth has been cleared of most of the market caps. The macro fundamentals stay strong, and like we spoke about just a couple of minutes back, how India is very positively positioned amidst this entire new world order that the Trump administration has brought to order, right? So we could witness some sort of capital migration out of China back into India, but this is majorly going to be on account of limited visibility in terms of earnings growth for in China's context, and for India there was anyway a strong case being built for a return of FII money even before these tariffs were taking place, right? So it is just a two-way tailwind that will continue to support FI inflows and interest going ahead into India.
Okay, okay. Any sector that we are cautious about, because pharma and IT has been definitely out of the flavor at this point of time, given both are export-oriented themes. But any other sector that you believe that can be out of investors' interest for some time at this point of time?
Yeah, so definitely IT is in a much more precarious situation versus
Mm.
pharma. I would say, IT is a larger pain to worry about versus pharma. Second, there are a few sectors that have been doing really well on the back of very robust macro outlook and very strong demand sentiments like real estate and cements. That's something that I believe will reverse in the next couple of quarters. Apart from that, there's a lot of pressure on the margins for several oil and gas marketing companies. So, oil and gas may be slightly out of flavor, or, in fact, one needs to be very calibrated and selective while approaching oil and gas. It's largely going to be the highly volatile basket going ahead. So, capital goods also from here on could face some resistance, going ahead. Of course, there's a lot of demand-led growth that is being anticipated, especially considering the back ending of previous year's capex budget outlay that the government did not push through, that we expected to come through the next couple of quarters. But barring that, sans that, there continues to be some sort of pressure on capital goods as well. So a couple of these sectors are going to highly highly vulnerable pack, so as to say it will remain highly volatile, very sensitive to the tariffs, and the tariffs themselves are volatile as we witness it right now, right? So the auto pack is a wait and watch, and one must dip toes very selectively, cautiously, especially in the export-oriented PV segment, companies.
Okay, okay. What about some of the fertilizer and chemical stocks, Nirav? Because they have been popping up in the trade. Do you believe that India versus China trade is playing out in some of the chemical stocks?
So definitely, this India versus China is playing out, and there's a lot of anticipation for chemical stocks to, post a turnaround. In fact, there's a strong reason to believe that the turnaround will be posted. In fact, we'll see glimmers of hope from this quarter itself. That is the fourth quarter earning results itself. There will be signs of hope and revival and turnaround in the chemicals segment. Similar extends to fertilizers as well. There is strong reason to believe that these two segments will gain a lot of positive investor attention in the next couple of quarters, and such interest may sustain for longer.
Okay, okay. Nirav, we have IT earnings which is also rolling out slowly and slowly. We had TCS already, and then we have Infosys and Wipro, which is coming out this week as well. But if we look at TCS management, they expect FY26 to be better than FY25. Would you still see it plausible given that the tariff situation which is ongoing, and of course there is an anti-day pause in the tariffs, but it's still it's a wait and watch mode whether or not these contours would be finalized. Where do you expect IT sector to be placed in a scenario like this?
Yeah, so better. I would say that FY26 could be better, but in very limited ways, because we know the demand environment is softening. We know US stands at a stagflationary, at the brink of a stagflationary induced recession risk. We know that export-oriented IT companies are going to remain sensitive to tariffs. In fact, the softer demand is going to lead to lower translations for GCC projects, AI, digital transformation projects. I feel there's going to be a lot of focus on cost taking. There is going to be a significant decline in big bang orders flowing through the books, and in fact actually being executed and translated into the P&L through the next couple of quarters as well. Probably the only sliver of hope comes from the fact that operating margins could look slightly better in account of a weaker rupee. That could be a ray of hope. Second, a lot of cost efficiency could, finally kick in. That's something that most of these companies have been working on quarter over quarter. In fact, even in the previous quarter's commentary, operating efficiency, cost savings is something that most IT biggies have been talking about. So, once that starts taking effect, we can see some sort of operating efficiency kicking in, and these are a few rays of hope. But honestly, from a larger picture perspective, this is not something worth writing home about. And the positivity could be very muted. Of course, another thing that could play out is that the current quarter, that is the fourth quarter, and the subsequent quarter plays out, so difficult that every next quarter starts looking better, aided by a favorable base. But that's definitely not something that would create an upbeat environment for IT stocks specifically.
Okay, okay. Nirav, but do you believe that investors' return expectations have been reset given that this sharp correction we have seen, and what is the trading strategy they should adopt for at least this year?
So there has been a strong case brewing for return expectations to be reset. In fact, moderated, especially in considering the wave of investors that came in the 3 years after the pandemic was out, right? So there has definitely been a case for moderation of return expectations. Going forward, the environment is expected to be highly volatile and vulnerable to risks on account of global macros and challenges spilling over into the domestic macros as well. So while India fundamentally stands strong, it is not completely detached or insulated from global risks. India occupies a very important role in the entire global trade cycle. and second order effects, if not first order, are expected to be felt very strongly back home in India as well. So investors must at this point of time dip into equities with very strong caution. As a house, at Fisdom, as Fisdom Research, we maintain a bias towards large caps. We are more optimistic on the valuation and the risk versus reward trade-off that large caps are offering at this point in time. We would strongly recommend, not going for sectoral plays, but now is definitely, while every time is a perfect time for bottom-up stock picking, now couldn't be a better time for doing that. So, large cap orientation, very high bias for quality. We are not upbeat on momentum strategies right now as we speak. Bottom-up selection strategy. If you want to go down the market cap curve, mid caps are offering good opportunities very selectively at this point in time. But amid macro risks brewing and limited balance sheet strength, one must be highly cautious about trading in the small cap territory. In fact, now is a very good time to start introducing fixed income strategies. Especially the barbell at two extremes of the curve. Into the portfolio. We expect this to add a lot of cushion to your overall portfolio. Now would also be a very good time to take exposure to global commodities like gold and silver. Probably, this is a year where multi-asset will actually come into play full force. So I would strongly recommend investors to look beyond just equities and pay a lot of attention to allocation strategies as much as they do to selection strategies.
That's right. Multi-asset allocation, that's what you're recommending. All right, with that, we have to let you go, Nirav. But thank you so much for your time. Hope that we connect with you soon.
Thank you.
All right, let's take a quick check of the markets at this point of time. Well, bulls have been reigning in the Dalal Street, and we can see that the Sensex is up about 1,500 points. Nifty is also up about 483 points, with above that 23,300 levels. So yes, we are above that 23,300 levels. We have reclaimed back those levels also. The market breadth is fairly in the positive territory. If you look at the advanced decline ratio, 2:1, that is where we are standing at this point of time. India Wix, a sharp cool off, 15% downtick at this point of time. Nifty FMCG index is seeing a bit of a profit booking, flat in the red at this point of time. Other than that, we can see all the sectoral indices roaring in the trade in the green as well. Nifty Realty Index, definitely one of the top sectoral performers at this point of time, given we also saw that the RBI rate cut is playing out on the rate sensitive sector too. Market breadth, small caps and mid caps, both of them doing well. Small caps eking off about 2% gains, and mid caps also with about 2% gains at this point of time. So all in all, a good markets to start off this week with, but with that we have to see whether or not this sustains throughout the week as well. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.